When manufacturing and accounting professionals first discover Odoo, they often want to understand how products move across the system and how it affects the accounting books. They also want to understand how products are allocated to specific work orders and how everything ties together. In this video, I aim to explain all of that as simple as possible so you can get up and running as quickly as possible. To do that, we're going to use the help of a sheet that I drew that will explain in simple terms only the things we care about for the purpose of this video. So we're going to reference this sheet and then we're going to go into the database and actually work through a simple problem so that we can understand how products move across the system. We're on a brand new database, so we'll start everything from scratch. The first thing that we want to understand are the products along with product categories and how that ties in with accounting. So on our left here, we have our product setup. We have a manufactured product, which is going to have a bill of material with product A and product B. Each one of these products is going to have a product category, and this product category is listed to the right. The product category consists of several different fields that we need to fill in that are related to accounting, but specifically we want to choose our costing method, which can be standard, first in, first out, or average cost. For the purpose of this video, we're going to stick with average cost, but we'll mention how some of the other costing methods can affect or change the scenario. There's also the inventory valuation method, which can be automated or manual. In automated inventory valuation, journal entries are created when we manufacture products, as well as when we purchase and receive, as well as sell products. So the journal entries are created automatically for us, so we don't have to manually count our inventory or update our balance sheet. Now, every product is going to have a product category, and these product categories can be different, but again, we'll simplify things here and say that each one of these is going to have the same product category. Depending on the costing method and the inventory valuation type, all of this is going to tie into the product cost. Now, this product cost field is just a monetary field that can be edited at any time. However, we want to avoid editing this because the system is going to handle updating the cost price as needed. So for example, if we're using average cost and automated inventory valuation and we purchase some goods, the system is going to take that price and update the cost price on the product record. If we assume that we've never purchased this product before and then we purchase a product for $10, then the average cost is going to update and the cost price on the product record is going to be $10. This value is going to be used throughout the system in order to determine margins, to determine how much a product costs inside of a bill of material to produce. So this product cost price is essential to everything that's going to happen in the system. Now, moving on from that, under our product category here, we have a box that says input and output accounts. This is going to refer to our specific production location. Now in Odoo, you can have a warehouse, and a warehouse can have many locations. One of those locations is going to be a production location of a production type, and that location is going to both consume inventory and produce inventory. So when you manufacture a product, the raw materials are going to be consumed in that production location, and then on the other end of things, your final product is going to be produced. So in our example, we're going to see that we're going to build a bill of material for our manufactured product here, utilizing product A and product B. Once we finish our manufacturing process, we're going to consume product A and product B, and we're going to produce our manufactured product. Now, another important thing to understand is that there is a stock valuation layer, which is just a model that tracks all of the costs for the products that we produce and purchase. If we look at our list here, we'll see that some basic information is recorded. There's a lot more information recorded, but we're simplifying this for the demonstration purposes. So we have a date, a product, the moved quantity, the unit value, and the total value. In this example here, on 2/1, we purchased product B, 10 units, for $1 each. So our total value for this line is $20. Now, 3 days later, we purchased product B once again, and this time we purchased 20 units for $2. And because we purchased the units for a more expensive rate, the average price on the product is going to increase to $1.50, as we see here on the left. So as of 2/1, the product average price would have been $1. Then, as of 2/4, the average price is $1.50. The same thing occurred for product A, where we take the average value, and the average price for product A is going to be $11. On top of that, we can see that we have our stock moves. Our stock move represents products coming in or out of the system or any location within the system. So we're just simply moving products around the system. Now, stock moves is what tells us what's available and what's allocated to specific manufacturing orders. In other systems, products are allocated directly to manufacturing orders, and this happens at an accounting level. But in Odoo, we have another layer that sits on top of everything that accounts for all of the product moves, which allows us to understand where products are at any given time, as well as the status of those products. So for example, when we create a new purchase order and that generates a receipt, a new stock move is going to be created for that product. And that's going to be in a specific state that identifies it as something coming in. So for example, it might say status available, which means that the product is coming into our location based on the starting location and ending location. We know and we have an estimate date of when that should come. That allows us to forecast and understand when products are coming into the system. This is also how products are allocated to specific manufacturing orders. So instead of having to move products specifically to a manufacturing order, you can reserve products on a manufacturing order, and that will tie up a subset of your units to that manufacturing order. Now, the units are not directly tied to the stock valuation layer. So once we move products around the system is going to look at our stock valuation layer and determine the cost price of the product when we're, let's say, producing them. So if we're using FIFO, for example, and we had to produce manufactured product and it needed 11 of unit A or product A, then it's going to take the first 10 here, which is going to be at $12 a unit. And then it's going to take one unit at $10 a unit. And that is going to give us our first in, first out costs of $120 plus $10 for a total of $130 for 11 units. As a result of consuming those products, our product A is going to update to be $10 because the next iteration or the next usage of a product is going to cost us $10. And that's for FIFO. Now for AVCO, because we're using average cost, we know that this cost price on the product is going to be the average cost of all of the stock valuation layer for that product. So it's a little bit simpler. So again, just to reiterate, we have our stock moves, which are going to determine exactly when products move across the system, and it's going to record those product moves, which is going to allow us to reserve units to specific manufacturing orders while not necessarily having to take into consideration the accounting impacts just yet. Now, the last thing we want to look at here under inventory is our production location. Now, that location has a stock valuation account for incoming and outgoing products. So this should be outgoing. Let's change that here. So we're going to set an account here, which is going to usually be a current asset that acts as some sort of WIP account. Now, when we produce manufactured products, the leftover amount from the consumption of the raw material and our operations as well as employee costs, those employee costs and operation costs are going to sit in this location for us to manually handle at a future time. And we'll talk a little bit more about what that means. Again, this is just to give some background information. We'll go in the system and we'll really explain and show you how all of these things move around. So for now, let's go into the system and we'll create these products, purchase them, and take a look at everything that happens before we move into the manufacturing process. So here we're in a brand new database. We'll go into inventory. We'll go into product categories. Let's create a new product category. We'll call this Avco Automated just to be clear. Under our inventory valuation, we're going to choose average cost and we're going to choose automated. For our income account, we'll leave it at product sales, and for our expense account, we'll change this to cost of goods sold. One thing to mention here, and this is not the purpose of this video, but we have our price difference account here, and the price difference account allows us to use our standard price. So if we wanted to use standard price, any difference from the value that we purchase it versus the value that's set on our product record is going to be held in our price difference account. We're not using standard price right now, so we won't worry about this. But just to reference back to our sheet here, this cost price here only updates in average and FIFO. So for standard price, we will manually set these cost price, and the system will always take this value unless we adjust it manually. So now that we have that set up, we can save it, and we'll go and look at our stock or our other accounts, and we'll take a look at our production account. So there's also the inventory adjustment account and scrap account where we want to set specific accounts, but we're very concerned with production right now and not too concerned with the other two. Before we do that, let's go into our chart of accounts and we'll just create a brand new current asset account. And we'll just name this 101, and we'll say that for this example, we'll just call it WIP. Now let's go back into inventory. We'll go to product categories. We'll go to our Avco Automated, and we'll look at our production location. And here is where we're going to set that WIP account. Okay, so now we have that set. We're going to create our products. So we're going to create product A. Take out the taxes just for simplicity. We're not going to sell these, and we'll just leave everything as is, and we'll make sure we set our product category. So now we'll just duplicate this, and we'll do it for product B, and everything remains the same. The last thing we need to do is create a manufactured product that we're going to build a bill of material with or for. And under inventory here, we'll just mark it as a manufactured product for the route. Now notice I didn't set anything else. We didn't set any cost price on any of these units. So we have product B and product A with no cost price. If we look at our valuation, we'll notice that there's nothing in here yet. And also if we look at our moves history, there's not going to be anything in here yet either. So let's go into purchasing. We'll create a new purchase order. Let's call this vendor 1. We'll add some units, so product A, and we'll add unit for product B. So we'll purchase 10 units of each, and just to be clear, let's do 20 units of each. So for product B, we'll do 20 units. For product A, we'll do 10. And product B is going to cost us $1, and product A is going to cost us $12. So let's do make sure we have that right. It should be 12. Okay, so now we can confirm this order, which is going to generate a receipt in our inventory module in order to receive those products in. So before we receive those products in, I'm going to go to our moves history, and they have a default filter here that says done. We'll remove that, and we'll notice that 2 move lines were created, or stock moves were created, and right here under status it says available, and that's because this is incoming. And if we hover over this, we'll see that available means when products are reserved is set to available. So these products can come into our warehouse. Because it's a receipt, there's no reservation process. Whenever we receive it in, we can receive it in. Now, if we go to our products and we look at product A, nothing has changed. So there's no cost price set on either of these. But if we look at the forecasted quantity, we'll see that there's a forecasted quantity of 20 units, but we have 0 on hand, 20 incoming. So the system is able to recognize that 20 units are coming in, and that is directly based on that stock move where it shows that it's available in the available stage. And once we receive them in, this is going to change to 20 units on hand, and our stock move is going to change to done. So now let's go into our receipt and receive those products in. So we'll just set quantities here and validate this. So now we're going to go take a look at our moves history again, and we see that there's 2 still, and they're both done now. And they're done because we just validated that order. If we go to products and we look at product A, we'll notice that the cost price has automatically increased for us based on automated inventory valuation. If we look at our forecasted quantity, we now see that we are still forecasted at 10, but now instead of incoming, we have 10 on hand. And we have none that are outgoing, so we're not consuming any of these products right now, and there's nothing reserved to consume, so we don't have anything in our outgoing, and there's nothing incoming, so we have nothing in our incoming. Now, because we use automated inventory valuation, we can take a look at our valuation. Well, this would update regardless of our costing method or our inventory valuation method, but total right now we have $140. And if we look at our balance sheet inside of our accounting module, we'll see that our stock valuation account has that same amount. Now, we have these stock interim accounts. The purpose of this video is not to discuss that, but just to briefly understand if you're not familiar. This stock interim account holds the value of the inventory to offset our stock valuation until we create a bill for that product, which will then clear out our stock interim received and then go into accounts payable. Now, we're going to purchase a few more units, so I'll just go in here and duplicate this. And in this instance, we want to purchase for $2 and $10. So we'll update this to 2 and we'll lower this to 10. And we can confirm this order. Again, that's going to create those draft moves or moves that are now in the available stage. And from here, we can just receive the products. And what I want to look at is the updated price on our product A and product B. So now we see the product A is an average cost of $11 and product B is an average cost of $1.50. And if we look at our valuation, we see the total value of our inventory is $280 with multiple different lines as we've seen in our diagram. And if we look at our moves history, there are now 4 different moves, 2 for each product. Okay, so now we've seen how all this inventory moves around the system. Let's take it a step further and talk about manufacturing. Before we do that, let's just quickly create a bill of material for our manufactured product. So we can go into our manufacturing module. We'll go into bill of materials. And before we do that, let's create the bill of material and then we'll update it. So manufactured product, we'll use component A and we'll use component B. And we'll say that we're going to use 10 units of each, and we'll just save that for now. Let's go back to our diagram, and we'll scroll down, and we'll look at manufacturing. So now, I know there's a lot of information here, but we'll break it down in just a second. So we have our manufacturing order here. This is assuming you have some knowledge of Odoo in general, but we have a manufacturing order here. A couple things to note. We have our status of the manufacturing order. So draft, confirmed, in progress, or done. We have our product that we're manufacturing, the quantity, the bill of material used associated with that product. We have some components that are going to be consumed in order to make this final product. And we also have work orders that are built based on our operations that we create, which we'll create in a second. Now, we have quantity, reserved, and consumed for our components. And these are tied to those stock moves again. So once we create a new manufacturing order in draft stage, it's going to create 2 stock moves for product A and product B that are just going to be in draft. Then once we confirm the order, we can reserve those products, which are going to create or update those stock moves, and it's going to then allocate those products to this manufacturing order. So that's how the allocation happens. So we're not allocating them in terms of accounting necessarily. So we're not taking that value and putting it into and tying it directly to this manufacturing order just yet. So we'll take a look at that once we build out our manufacturing order, and we'll see that step inside of the system. Under our stock moves here, we'll see that we would have reserved stock for A and B for this manufacturing order. And we'll also are going to create a stock move for a manufactured product because that is something we're going to produce. So this manufacturing order is going to pull in product A and product B and produce manufactured product. We're going to create a work center that we're going to use for our operations within our manufacturing order that is going to be built on the bill of material and automatically created during the manufacturing process for us. So those work orders will be automatically created. Inside of each work center, we're going to set the cost per hour for an employee as well as the work center cost. Now, it's important to note here, although I did tie this value directly to our journal entry, the actual value is going to be produced by working on our work order. So for example, our work center cost is estimated at $100 an hour, but based on the actual time used, or the actual time needed and used to produce their manufactured product, that actual cost is going to be used when we value our manufactured product. And the employee cost is going to be pulled from that time that we spent in the work center times the employee cost that is set on the employee record, and we'll look at that as well. As a result of completing this manufactured order, the system's automatically, once we confirm and mark this as done, is going to create journal entries for us. Now these journal entries are going to be first to move the raw material out of our stock valuation account and into that WIP account that we set on the production location. So we're going to credit our stock valuation account and we're going to debit our WIP account. The same thing is true for all of the products that we use for this manufacturing order. As a result, those products are going to be consumed in the production location, and then on the output side, we're going to output the final cost of the manufactured product. So we'll credit the WIP account for the final product cost, and we'll debit our stock valuation account in order to increase the value in our stock valuation account. As a result, there will be a value left in our WIP account, which is going to be our operation cost for the work center plus the employee cost for the work center. And then our accountant or our accounting team will allocate some percentage of our overhead costs, our operation costs, as well as some percentage of our salaries and salary costs that come in on our bank statement, and they're going to move that value into our WIP account in order to clear it at the end of the month. So we see that we got $275 here by product A, which is $110 total for 10 units, product B, which is $15 total for 10 units, the employee costs, assuming that our operations took a total of 1 hour, and our employee costs, assuming that the operation took 1 hour, and our operation costs at $50. So this should be flipped here. So let's just update it. Well, we can leave it. We get the point. So we have $50 for our operation costs and $100 for our employee costs. And we're going to assume that the total duration to build out this product was 1 hour. Now, when we do our example, we should note that it's going to come in at a different value because we're not going to sit in the work center for an hour during the video. So in reality, this should be 0.5 hours if we did 2 operations. And we can change this to be our employee, and we'll say that this is the work center. So now that's all updated correctly, and now we can move into our system and work through this process. So let's go into configurations here. We need to turn on our work orders, and we'll just save that. So let's go into our work centers now. and we'll create a new work center. We'll just call this work center 1. And what we really care about here is our costing information. So our work center cost and our employee cost. So we're going to set the work center cost at $50 per hour and our employee cost at $100 per hour. We'll require login here, and we'll pin in so that we recognize the cost for a specific employee. Now we can go back to our bill material and we can add some operations that we need to complete. So we'll just call this operation 1 for our work center 1. We'll say that this is going to take 30 minutes. We can set the employee capacity. We'll leave that at 1, and then we'll do one more operation, and we'll set this to 30 minutes as well. Save and close that. Now keep in mind you can add instructions and steps to these operations, but that's not the point of this demonstration. So now that we have that all created, we can look at our overview. And our overview is going to tell us the cost to produce this product based on our bill of material. We have our manufactured product is going to use product A and product B, 10 units of each. We have our operation 1 and 2 for 30 minutes each. Each one of these is going to cost $75 for a total of $150. And this is going to be $75 because remember, it's going to be our operation cost plus the employee cost. So we're going to do 30 minutes of employee time, which is going to be $50, and 30 minutes of our operation, our overhead for our work center, which is going to be $25. So 50 divided by 2, and then we have 2 steps. It's going to take us a total of $150, and then our product A and product B is going to bring us to a total price of $275, which is exactly what we demonstrated here at $275. Now, as I mentioned, the cost that we actually pull is going to be based on how long we are in that operation and our employee cost and our employee record. So in employees, we can go to our HR settings and set the cost per hour. And this is going to be some estimated cost that you come up with. So we're going to set $100 here. Now we have everything configured. We're going to go into manufacturing and create a manufacturing order for manufactured product. And we're going to save this. And before we do anything else, we're going to look at product moves. So we'll go back into inventory. All we did was create a manufacturing order and save a draft manufacturing order. So let's go into moves history. And we'll remove this line. So let's go to stock moves. And now we're in stock moves. And we'll look and we see we have 3 that are in status of new, which is essentially a draft. So we see that we're going to take product A and product B from our warehouse stock, which is the default stock location for our warehouse, and we're going to move it into our production location. So it's going to be consumed in our production location, and as a result, we're going to produce one manufactured product from our production location into our default stock location for our warehouse. So now let's go into manufacturing, and we'll go back into our manufacturing order, and we'll confirm this. So as a result, based on my settings, we automatically reserve the units that we have on hand for product A and product B. So now I want to take a look at what that looks like. So I'm going to go into inventory here. We're going to go to our products, and we're going to look at product A, and we'll look at our forecast. We'll look down below. We'll see that reserve from stock 10 units, which is going to be used by manufacturing order number 1. And that's how we allocate the inventory into our manufacturing order. So although we didn't physically move it into our manufacturing order or on an accounting basis, there's another layer here in Odoo that keeps track of how the products are reserved in for specific manufacturing orders. And this is true for delivery orders, transfers, and everything else, but we're mainly focused on manufacturing for this demonstration. On the top here, we do see that we have 20 units on hand with 10 units outgoing, so we have a forecast of 10 units total. From here, we can on-reserve these products from manufacturing order 1 in case you wanted to free them up, but we'll leave them reserved for now because we're going to use them. Now, in our stock moves, we now see that this status has changed to available, and our product or our manufactured product is waiting availability because it's not available until we actually manufacture the products. So now we can manufacture the product, and we'll go into our work orders here. We'll click into our work order, we'll select our employee, and now this is the screen where we would have all of our instructions. We'll work through the manufacturing process, go through those steps, and once we're complete, or once we've completed all of our steps, we'll mark this as done. Keep in mind, if you're not familiar with Odoo, there's steps here. We can create quality checks, we can have instructions, diagrams, measurements, but that's not the point, again, of this demo, but I just wanted to quickly mention that. So I'll mark that as done, and now we'll go into our operation 2, do the same thing. While we wait for some time to pass, we can take a look at some of the other things that are available for us. So if we need to have some downtime on this operation, scrap a product, add a component, add a byproduct, add steps in our manufacturing process, we can do that from this menu. But now that we're done, we can mark this as done and close our manufacturing order. Now if we go back and we look at our manufacturing orders, we have none to do, we just completed one. Now notice that our expected duration was 60 minutes total, but our real duration was just under a minute, so our product price is going to be skewed for this example. Now we can look at our cost analysis. So our cost analysis for this product, we see that the total cost for this product was $127. We spent time in Work Center 1 and Operation 1 and Operation 2 inside of Work Center 1. The working time for each of those, the cost per hour, which is directly pulled from our Work Center costs, and then the total cost based on the math of this time times our cost per hour. And we also have some employee costs, and if multiple employees were in that operation, multiple employee costs will be down below. And we have our total cost to the right, and this was directly pulled from our employee record, not what we've set on the Work Center itself. Although it's the same value, this is actually pulled from my employee record that we set. Now, as a result of that happening, several things occurred. We'll go into inventory. We'll look at our stock moves, and we now see that 10 units were completed, moved from our warehouse stock into our production location, and we see that this status is done. And we also see that we produce one manufactured product from production to our warehouse stock. And all of the accounting and bookkeeping was taken care of by the system. So now if we go into our products and we look at our manufactured product, we see that the cost price has updated based on the unit that we just produced. So it was a total of $127.20 to manufacture that one product. And if we look at the journal entries that were created, we can go back to accounting. We can look at our journal entries, and we'll take a look at a couple of the different journal entries that were created. So we have product A here, and we notice that product A was credited in our stock valuation account to reduce the value in our stock valuation account and increase the value in our WIP account. The same thing happened for product B. And then finally, our manufactured product was produced from our work in progress account into our stock valuation account. Now, if we go into our balance sheet, we'll notice that there is some value left in our WIP account, and that is going to be $220, which is going to be the value of our operation costs plus our employee costs, and this is there to offset our stock valuation account. Now, at some point in the future, your accountants will come in here and offset our WIP account, clear it out by allocating some salary expenses as well as overhead expenses into this account to account for the asset that we just created using some of those expenses. So that is pretty much the process that I wanted to show. We'll go back to our diagram here just to reiterate some of the things we learned. So we have our manufacturing order. Our manufacturing order, once completed or once created our draft stock move lines. Once reserved, our stock move lines updated to available, and then once completed, our stock move lines updated to done. As a result of completing this manufacturing order, our manufacturing order produced 3 journal entries for this specific product that we produced, which is to pull in our product A and product B from stock valuation into our production location, and then to produce our final good from our production location to our stock valuation location. We also learned in our inventory that our stock moves are going to tell us how products are allocated across the system and reserved to specific manufacturing orders. We notice that our stock valuation layer is going to keep track of all of the value of all of our products. And we took a look at how to set up some of our products with our product categories as well as our production location. The last thing I want to reference back in our database is that stock valuation layer. So let's go into our inventory, we'll go to reporting and look at our valuation. And here we see all of the valuation moves. So we still see the right amount for our total value of inventory, but it did keep track of everything incoming and outgoing. So we have our 4 product moves here from purchasing it from the vendor. And then we have our 2 outgoing to our production location. So we removed some value. And then we added value back for our manufactured product at 127.20. And that gives us a total value of 282.20, which matched our balance sheet. So if you have any questions based on this, please let me know.